Hello, everyone, and welcome to Moementum Mondays. On these weekly series, every Monday, we invite one inspiring young man or woman to our show and talk to them about important topics, including investing, financial planning, and financial education. Many of our guests include fellow YouTubers and investors who I've followed on YouTube and enjoyed their contents. Without any further ado, let's get into it. I'm here with Nick from Vase to Wealth channel. We have another series of Momentum Mondays, and I'm so excited to have Nick on our show. Welcome, Nick.
Yeah, thank you very much for having me, Mo. When you reached out, it was a great idea, being able to collaborate with other YouTubers and kind of spread the good word, the hard work that we're putting in and the value that we look to put. As Mo mentioned, my name's Nick. I run the channel Ways to Wealth. If you haven't checked it out, it's a little bit of personal finance, it's a little bit of stocks, it's a little bit of real estate. It's primarily for financial freedom, and that's kind of what my channel is all about. I know Mo does kind of the similar thing, so that's where we kind of connected on that point. So yeah, happy to be here. Thank you very much for the invitation. I appreciate it.
Of course, Nick. Yeah, and absolutely. As I've been watching your videos, Nick, I've really they have really resonated with me, and I found them quite valuable. So I thought I'm gonna reach out to you, and we're gonna have a conversation. Do you mind, Nick, sharing with our kind of viewers a little bit about your channel? What kind of inspired you to start it in the first place, and perhaps when did you start it?
Yeah. So I believe it's come past my 1 year anniversary. I think, as the YouTubers start out, we put out one video and then it's not like we have, a scheduled time. So I think my first video I put out like January 9th or something like that. And then I didn't follow up for maybe a month. But yeah, so kind of consistently going since March. But what inspired me really, taking it back and looking at it was the way that I was able to manage my finances kind of growing up and looking at my circle around me. I saw that there's like a huge gap in our education system, and I know so many people talk about it, but there is a huge gap there that I look to close. And financial freedom isn't for the ultra rich; it's for absolutely everybody. So that's kind of where I get my fundamentals from. In 2017 was when I kind of started my investing journey. And, when I started telling people that I was investing, I wasn't getting that same type of, there was this overhanging cloud that it's for like the ultra rich. So I just hoped, to follow in the footsteps of, Graham Stephan and Financial Jeremy, and just kind of help build this financial community. And that's kind of where all the motivation stems from.
It's funny you mentioned 2017. That's when you started investing, and actually that's the year that I also got really into stock market here in Canada.
Yes.
Now there are times that I wish I would have started. I wished I started earlier, but it's okay. I guess you have to start somewhere, and it's really perhaps not how you start, but more so how you finish, and really building that education and educating yourself around the topic, why it's so important. And really, I think for me as well, for my channel, really seeing that gap, and the fact that I wished I started earlier, I really wanted to inspire other people to really know what are the kind of the options that are out there for them. It's not just about stock market, I would say. It's not perhaps for everybody, but there are various channels out there. But really, to your point, the importance of financial literacy and financial education is so crucial. So for me, the channel was really a way to kind of connect with other like-minded community out there, inform them about the importance of financial planning, financial freedom, and what are the options out there for you, for our viewers. I started my channel back in March of 2019. So I would say maybe just about a year before you. And similarly, in the beginning, perhaps the channel was very slowly growing and not really putting a lot of time to make videos. But over time, I think one thing I noticed is that as you start to have more followers and start to see more interest from your channel, you kind of start to really build that.
It drives you.
Yeah. It really drives you. It does.
Yeah, no, that's definitely some. Do you ever go back and look at your first couple videos and then say, wow, I've come a long way. I looked at mine the other day and I was like, ooh, I was like, I don't know who ever watched this, but that's it. It's you got to learn by doing, and you got to put in, each video, maybe you work on something else, and you get there. So you started in March 2019, eh?
Yeah,
Do you know
yeah.
how many videos you've put out roughly?
Oh,
Do you
yeah.
have like a set schedule?
In the beginning, not so much. It was at the beginning, it was like, yeah, you're excited, you want to put more videos. And then towards after a week or two, it might die down. It's like, not seeing so much improvement. So you then can lose a little bit of that drive. But I think definitely within the span of, I would say, past year, that's when I really picked it up. Especially this year, 2021, I've really picked it up. I think in January so far, let's say in the first, we are still in January by the way we are recording this video, but within the span of the first 3 or 4 weeks, I've already perhaps posted close to 18 videos. So I was really
Wow.
impressed with that. There is a balance though. I think that's something that I kind of have to remind myself is I want to try to make sure the videos that I put out are the topics that I also enjoy. And I think that if I were to watch that video, would I want to watch that video? And do I get a value out of it? Because it can
And
get really tricky, especially you hit certain points and you want to really grow faster. And then you see, oh, what are the topics that are really doing so well? And maybe but it's out of my league or out of my, out of my forte. So you don't want to necessarily fall into that trap. I think that's something that I've perhaps learned so far.
yeah, no, that's definitely one of the learnings. It's like you look at what's hot in the market right now, like Ethereum, Bitcoin, your Teslas of the world, and if you put a video out, you're going to get a lot of views. But is that typically like what you really love? Is that what you really want to focus on? Okay, you might get less views, but you're more passionate about, other topics, whether it's real estate or savings, whatever that
Mm-hmm.
topic is. If that's what your passion is, I feel like with the amount of people in the world and with the amount of people that are on YouTube, you will eventually find your niche. You know what I mean?
I
So
absolutely agree with
yeah,
you.
and that's kind of the approach that it's taken me a while. I've dabbled in a few different things, but yeah, I completely agree. You got to talk about what drives you, what you find interesting, and I think that emulates in the way that the video comes out. That's for
Mm-hmm.
sure.
I absolutely agree with you. And the audience are going to see it through the video for sure. You've been obviously investing now for about 3 to 4 years. Nick, can you share with us what have been some of your top lessons that you've learned investing in perhaps stock market or other means out there? What have been some of your key lessons?
Yeah, you know what? I mean, I guess I look back at it now, and the first purchase I ever made was real estate. I know we had briefly touched on the topic before the call, but we're both from Canada, and our real estate market is running a little bit hot right now. But I got in 2014, and I was 23 at the time, is when I made my first purchase in a townhouse, and I've been lucky to benefit off of the run that I've seen there. And I saw what the hard work could do. And as those prices started to get a little bit higher and not being able to go to the bank and get any additional money to get a second property, I started to look at other avenues of investing, and that's what kind of led me to the stock market. So with the stock market, I guess the biggest lesson that I've learned is to stay invested. Find a great company, find a business that you even use. If like, one of the best examples is if you have no idea what the financials, the fundamentals, what all of the extra, investment analysis that goes into it, find a company that you use every single day, find a company that you love. If you wake up every morning and think about Starbucks, or if you shop at Walmart, or if you shop at Loblaws, those are companies that you should be investing in, because those companies are going to be around forever. The second lesson that I've learned was kind of that December 2018 crash that
Mhm.
we had when they started raising interest rates,
Yeah.
was not to panic sell. That was kind of the second lesson, was that the market, the longer you stay invested, you take out that time risk. For the third one, what I guess the biggest thing for me is, don't worry about beating the S&P 500. Don't worry about that. Figure out what your metric is. figure out what's going to make you happy. If you turn around and lose 30% tomorrow, how is that going to make you feel? The emotions of, missing out, the emotions of having an investment go down, that's kind of been all the real to me, and kind of pushed me towards the way that I've currently set up my portfolio.
That's amazing. Yeah, and you got your property at a fairly young age, I must say, and that's quite impressive, Nick. At age
Yeah, thank
23.
you, thank you. It was grateful to have a couple parents that helped guide me
Mm-hmm.
and give me the education, and I had seen them do similar things.
Mm-hmm.
So that's kind of also what kind of drives me to make the channel, because I feel like I was privileged when I was growing up. So if I could share the same knowledge and help somebody else who's maybe not getting the same messages that I am, hopefully this is going to help somebody the way that I've kind of set myself up for
For
financial
success.
freedom at one
Yeah.
point. Yeah.
Yeah. It reminds me of the book Rich Dad and Poor Dad. I think your upbringing plays a huge part, right? How the type of mindset that you develop since young really plays a huge part in terms of the decisions and the actions that you make
It's
later on
it's
in
so
life.
true. It's so true. I think one of the biggest quotes that I always use is, "It's not how much money you make, it's how much money you save." And I feel like that point isn't really driven home, in the sense that, like, you don't need to go outside of your means. You don't need to maybe have a car that you don't need. That is kind of the fundamental behind, being that financially free guy. So that's kind of where my messaging, where everything starts on that point. But yeah, no, it's been a great ride, and obviously, you got to go through the ups and downs, and being able to weather that storm and maybe turn off that screen and not look at your stock portfolio every day it's been good.
That's
It's been
good,
good.
very good advice. And knowing your risk tolerance and also having the longer term vision and not necessarily worrying so much about the noise along the way. Because
Yeah,
if, let's say, you're investing in the stock market and you don't need the money, let's say, until the next 10 or 15 years, for instance, whether it goes up and down during this in the between, it's not going to make any difference. Ultimately, it's headed to that endpoint. So that's what really truly matters. It is easier said though than done, because I know sometimes, especially these days, with so many new IPOs being added to the stock market, and so many penny stocks out there, which obviously are very hot topics right now, and you see how they do so
exactly.
well, maybe in the short span of time. I know a lot of investors, they get tempted, like, wow, you get to have a massive gain of, let's say, sometimes easy double digit within a couple of days. But at the same time, I say easy. The thing is, you can't really time the market, can you?
No, no, I think I did a video on that, and when I really broke down, I looked at the research over time. It really showed me that time in the market beats timing the market, and yeah, no, it's crazy with the momentum of the Russell, like 2000, and the penny stocks right now. Do you dabble at all in that, or do you kind of stay away completely?
I wouldn't say I stay awake completely, but I barely, I would say, maybe invest in penny stocks. There are a couple that I do. So obviously, it doesn't stop me from making videos about penny stocks. But at the end of those videos, I usually always provide my own insight about it, like whether I would be buying it or not, whether do I feel like maybe the company is perhaps overpriced at the time. For me, there are a couple of penny stocks, and we are in Canada. I think there's one that we both know we are
Yes,
invested in. I made a video
yes.
on it, and you commented on it, Nick. Greenlane, Renewables.
Yeah, no, Greenlane is definitely a great company, and
How did you
one of
guys
the
get?
sectors.
Yeah, how did you get kind of interested in that company and
Yeah,
invest in them?
yeah.
What
So,
what
like,
what made you to invest in that company?
back in the summer, they signed a contract with California dairy farmers. It was a $21 million contract, and that's what kind of opened my eyes to the company. So I made my first acquisition in June or July, and at that point, it's ever so clear that clean energy, renewables, this whole sector is going to be where the growth is now. Whether the fundamentals and the valuations are in line, I'm not sure, but I do know this is where a lot of the focus is going to be moving forward. So the process of going to landfills, going to farms, taking that biomethane and making it into renewable natural gas made so much sense. I know there's a competitor, ZBEC, XBC, yeah, on the TSX, and similar company. But what I liked about Greenlane is that it's not a brand new company. I know it only IPO'd in 2019 or just a couple years ago, but it's a company that was formed in the 80s. They have existing contracts. It's a company for me that I'll be a long time holder. I'm up, like you mentioned before, with the penny stocks, you can go up really high, really quick. And when I see, triple digit, growth, sometimes it does make me want to sell, but I've had some learning lessons along the way I'm going to buy and hold. That's my personal investing strategy. Do you invest similar, or do you have a couple different strategies yourself?
I think mine is I'm not necessarily a buy and hold. Buy and hold perhaps for certain companies. Like there are some companies, like for example, banks. There are a couple of bank companies. We have some amazing banks here in Canada that they've been steadily paying their dividends even during the financial crisis. They have really kind of recovered from that financial crisis and the drop of the stock price very well within a short span of time, quote unquote. But I would say those are the type of stock that definitely I do see myself holding long term. There are some other companies in the tech that I do believe in them strongly, so I'm holding on to them longer term. One piece that I'm working on this year, Nick, is around the number of holdings. So I think I've come to a realization that perhaps I have way too many different stocks in my portfolio that really makes it so hard for me to do proper research on many of them, right? Obviously, I did the research at the time that I bought them, but it doesn't allow me to now continuously do the research and really gauge, is it still the right holdings in my portfolio?
Yes,
so I really want to trim that and rather get to a handful of perhaps 15 stocks or so that I'm much more comfortable with. I could have a couple of speculative stock along the way, maybe just trade here and there, but I think for longer term holdings, I want to get to that point.
Yeah, that's awesome. I think, no, for me, I guess I'm buy and hold is really, so for my fundamental in my TFSA, 80% is set up as like long-term never sell type companies. It's made up of all those names that you've listed before. I got Bank of Nova Scotia, I have RBC, I have TD. I believe out of that 80%, 40% of that is financials. So, that long-term dividend growth, some capital growth. I'm starting to reevaluate that portion of the portfolio because I think that there's some fintech that might come in there and take away some business. Can we imagine Canada without a RBC or a BMO or a bank on the corner? I don't know. Enbridge is another part of my holding, which I think is pretty undervalued right now. So looking to add to that. I have some consumer staples like Dollarama, Aecon as an infrastructure play, obviously coming from the, I bought in March. I had so much dry powder because I noticed that we were like so much cash on the side, because I noticed we were coming to a top, and not that I really predicted that coronavirus would kill the economy, but I was cautious. So it's not like I sold anything going into it, but I definitely wasn't adding any new money. And I bought Manulife and I bought Aecon. Those are my two biggest purchases of brand new entries. And they're both been doing great. And there was a few months heading into the summer, obviously the tech sector did boom. And these kind of cyclical stocks were left in the dust, and I was wondering, like, did I make the right choice? didn't I? But obviously, ever since November, that trade has kind of happened, and my investment thesis stayed the same. It was Manulife. I happen to use them for every single company I've worked for the health benefits and for the RRSP contributions and everything. So they're a massive company. I know that their growth exposure in China, like the exposure in China is great, and they have a lot of opportunity to grow. And Aecon, again, like I mentioned before, was the infrastructure play. As we recover and come out of the pandemic, we're going to have to put a lot of money into rebuilding roads and so forth. So that was a little bit of just find an investment thesis, pick a company, and roll with it. And that's kind of the way that I do. I've started moving 20% into a little bit of growth. I do think that tech with interest rates so low is an opportunity to grow. So I've added some names on weakness, like the ARCs of the world. You know, I really like that automation and robotics. I think companies during the pandemic have realized that they really need to automize and you know, really take out the human factor. And I think that'll help supply chains, processes, costs. And then I also like genomics. I think that is the way that we cure cancer in the future. And the fintech one is good. I don't personally own that, and the ARK, just the straight up ARKK. So yeah, so I'm starting to move to a little bit more growth. Obviously, I'm so young that I'm trying to get away from these dividend payers. My original goal was to have dividends pay for my lifestyle. So now I've kind of, I'm still keeping that fundamental 80%, but 20% is not going to be
branching out.
growth.
I was going to ask you, since you're quite young, Nick, do you feel that perhaps when you're that young, perhaps you could maybe get a little bit more to the growth, or did you feel perhaps that maybe, you know, had you put a little bit more emphasis on the growth, you could have perhaps grown maybe more? I know it's hard to predict, but at the same time, you know, the growth stocks, sometimes in hindsight, you look back and say, well, you know what, maybe a lot of these more safer dividend payers, they did well and they are stable, but longer term, you're losing also that growth potential with them.
Yes, of course. Heading into 2020, my real focus was to build up my dividend portfolio and kind of be an income investor. For me, my goal was if I could get enough in dividends to pay for my yearly expenses, then I can spend my time doing what I love to do, whether that's consulting, whether that's setting up an e-commerce business, whether that's doing YouTube. That was my real goal heading into 2020. And I do believe in dividend paying companies still to this day. I don't think I'll change up too much of my metric in my registered accounts. But yes, you're completely right. I am in a position where I can put my money to work and try and hit some great companies. I think I've learned a lot in terms of when that interest rate goes low, companies can essentially, you know, hand out money for free and get these massive amounts of money for R&D at such a cheap rate that the stock price will only reflect that in the future. Do I have FOMO? No, but I've learned, and I will definitely have these lessons ready to go for the next time we do see a downturn in the market.
That's always good. It's always good to reflect on those. And, you know, and I think one positive thing I really hear from you is that the fact that you are clear, you know what your investment strategy is, you know what you expect, what you plan to do. So then when the right opportunity comes, then you're clear what you're going to do. You're not going to necessarily panic and, you know, lose the opportunity.
The emotion factor is probably the biggest killer. I know with a lot of retail investors. And if you can have a plan and stick to the plan, and you know, that's the biggest thing that I tell people. People ask me all the time, like, oh, what do you think? Well, simple. Should I open up my own and let them handle it, or should I do it myself? And I said, well, if it says -20 and it's red and it's like thousands of dollars in the negative, are you going to sell? Like, what's your emotion? I know it's hard without really doing it, but if you can't think about it and can't have an answer for me right now, then it's probably not the best to kind of manage your own portfolio. But The other thing, the supplementary side of that is that, you know, you give your money to a money manager, they want to outperform the S&P, and so many money managers don't even do it. So just put your whole portfolio in an S&P 500 low index ETF.
Mm-hmm.
You pay a low MER, you probably pay less than like 0.5%. And if you miss the, you know, average return of the S&P by 0.5%, then what does it matter? You don't, it's blind. It's um, the easiest way. It's what everybody should be doing in my opinion. But there's some people that like picking stocks, that like trying to hit home runs. And what is your breakdown? Like, how do you figure out that you're going to buy a company? Is it fundamentals? Is it technicals? Is it a little bit of A, a little bit of B?
It's mostly fundamentals. I haven't dabbled too much into technical aspects of it. Fundamentals, and also really doing the research on the company. As you mentioned earlier on, knowing the company. I don't think it's probably a wise decision to invest in a company that you have no clue what they are doing. I think definitely that's the wrong way of doing it. You might be lucky, and you know, maybe your portfolio might grow that way and you gain money, but I don't think it's really the wisest decision. So try to really research the company. First of all, do you relate to what they are doing? Do you understand what they're doing? Are you able to even maybe to perhaps another person tell them in simple language, what do you understand of this company and what they do? I don't know where I read it, but I think somewhere I read that if a good measure, perhaps at least a basic measure, is for you to be able to simply tell what the company does, maybe to a 70-year-old. And if they understand what it is, then most likely, you know, you're able to at least at a basic level understand what the company is all about. Once you do that, doesn't mean that you go ahead and just buy the company. As we talked about, it sometimes depends, of course, on your time horizon. If maybe you're looking at it very long term, perhaps it doesn't really matter you're buying it at this price or a lower price. Nonetheless, I think if you familiarize yourself with the fundamentals and the valuation metrics, you might be able to get a much better bargain, right? If there's this, let's say, house that you're interested to buy in, and today is valued at, let's say, $1,000, and tomorrow it is worth, it is actually, the price tag of it is $800. Wouldn't you rather buy it at the cheaper price? Probably you would. Why not? It's the same house, but it's at a discount.
Yes. Now you've researched a company, you can do your 30-second elevator pitch, you know all the background, the fundamentals, you have increasing revenue, the margins are increasing, whatever makes you tick. Do you buy at all-time highs, or do you put it on a watch list and say, you know, maybe if the market discounts it 1% or 2%, that's where I'll make my original position? Do you have like that type of formula?
More so the latter. One thing that I would say I rarely ever do, buying a stock at the 52-week high price. That I definitely stay away of that, because you know, although you can never predict, right? Some stock that hits the 52-week high, they might still continue to go up and up, but I believe that at one point they're going to come down. So I'd rather be patient and add them to my watch list. One thing I might do, and this is something that has happened, so sometimes maybe the valuation might not be the best, but it's not the worst either. So what I would do in those cases, if the company is something that really I'm interested in, I might get in with a very small, very, very small. Okay. And when I say small, I really mean small. And nothing wrong with that, you know. Especially with Wealthsimple Trade, if it's a Canadian company, you're not paying any commission. So I'm okay with that. I might perhaps buy very few shares and then see how it goes. If it continues to go up, then at least I know, okay, I made some, and maybe gradually add more. If it goes down, I love it even more because I love the company already. I'm now buying it at a discount. Why not?
That's the best. I love when companies go on sale.
Yeah.
And that's what I've kind of trained myself to do is when you see massive hits. Like, well, I made my original purchase into the ARC genomics. Yeah. I think it was a month ago. It saw 8% decline in one day, and I said, "This is my entry point." Yeah. And now I think I'm up 15 or 20% in like a. I try not to look at my portfolio all the time, but yeah, it's definitely like, what was it? News last week about Biden on his first day, he's going to cancel the Keystone. Yeah. And then all of a sudden, Enbridge was down like 1 or 2% off the news, and obviously, that was what is it, TC Energy that was the keystone.
Yeah.
So it had nothing to do with Enbridge. So why is Enbridge off 1 or 2%, right? That company pays a 7% yield. Payout ratio is a little bit high, but when you look at the way their business model is set up and the way that they have the natural gas, and I'm a customer, so realistically, I love this company. I love the yield, and that's primarily like a yield play for me. But if you see those companies taking a little bit of a beating, one that I was tempted on last week was the Couche-Tard, with the news of the takeover for Carrefour. I don't know if you follow this company at all, but
No, I don't.
Couche-Tard is the gas station mogul that I believe they're in over 170 or 100 countries. So Couche-Tard owns that. They're in the US, they're in Europe. And anyways, they wanted to segment into grocery. So they tried to buy this private French, actually it was publicly traded, but it was a French company, and the finance minister shut it down. But before that, when they announced the deal, the stock fell off about 8 or 9%. And I was looking to make my entry position. I did hold off on that only because what's the future of gas stations when we start moving? But they do have a presence in Norway, and Norway does have a little bit more EV car, which is another huge opportunity. And I think growth has definitely moved in the stock market for that. Do you own any EVs yourself?
I do, yeah. Aside from some of the names such as Hyliion, which was it was very popular. So the good news is I don't own the shares at necessarily very high prices. So and with Hyliion, I could have probably made a killing had I sold them at the time that it was close to their 40s or 50s. And it's one of those things that you think, well, I believe in this company perhaps longer term, and I think they have a bright future. So you don't sell, and then fast forward, they come so much lower. I think last I know they're hovering around $17 or so. So from that high to this low, you would probably kick yourself like, I should have probably sold. But I guess it's okay. Like, you can never predict what's going to happen with the stocks. And B, if anything, if you still believe in the company and think that's a good long-term play for you, it gives you perfect opportunity to add more shares. That's one. Plug is another one that I have a couple of shares of. Definitely some of those ARC automation ones, the ETFs one. There are a couple of ETFs here in Canada. I think I covered them on a video. If it Emerge, I think there's one called CARS, CARS. That's another one that I have a couple of shares of as well.
Do you have that? That's awesome.
Yeah. How about yourself? Are you into EV and EV kind of?
Yeah, you know what? For me, I personally love Nio. I think Nio, and the reason that I love it is because of the exposure in China, and I think that the growing middle class there is where the growth is going to be in the next 10 years. If you segment the world into continents or economic regions, if there's one area that's going to boom, it's going to be China. So obviously, one of the concerns there is Nio's trading as an ADR on the Nasdaq there. So that obviously the delisting is definitely a risk. But when you look at the growth, it could be like the Chinese Tesla, and obviously I haven't touched that. I haven't, I'm not in that.
Okay.
Yeah, so that one is a little bit of FOMO. I remember in 2018 looking at it, it was 180 a share, and I'm a strong believer in the company. There's nothing bad I have to say about it. But yeah, no, some FOMO there, that's for sure. But no, I think Nio, growing middle class in China, I think the battery switches is definitely a cool concept, but they will continue to build those power stations throughout China. I know they've already started. They have high goals in 2021 and 2022. But the design is sleek. I like it. It's a beautiful car. I can't wait for them to start moving into like European or North American markets. Yeah.
Is there one sector that you're most excited about in 2021, Nick?
Yeah, there's like, I guess kind of, rolling it back to the discussions that we've been having, it's kind of like clean energy. I think clean energy is solar, renewable natural gas in itself. This is going to be the way that we move forward as a society, whether you like it or not. Unfortunately, you live in the mecca of the oil sands there. So
Yeah.
I'm sure you see a little bit of the detriment that it's doing to our economy, but it's something that we're going to have to adapt. It's nobody wanted the pandemic back in March of last year, but we've had to adapt and we've had to move forward. Another sector that I definitely like EVs. It's run a little bit. Wouldn't be adding really any more new money to it. There's obviously cannabis in the US. I always thought it would be a US company that goes and takes that market over. So I'm interested to see, obviously there's like Curaleaf, there's Planet
Mm-hmm.
13, the parent company Graham. I did a video on that. That one's got an interesting play. They take care of the supply chain from start to finish. So from growing directly to e-commerce. So they kind of get to different touch points. And Jay-Z's a part of it. So they have a little bit of star power there and a little bit of advertising. So I'm interested. I made an entry, very small position on it, just to get some exposure and put my head in there. What are you thinking? What do you think the next decade looks like?
Clean energy. I think clean energy and EV being a subset of it, indirectly related to that. I think those are the two ones that I think are going to be big. If I were to put my money on something else, I would probably say genomics, because exactly as we talked about it, I think it's the future. And seeing how this pandemic hit us, and then we had to, the researchers had to be so agile and doing their best, bring the best and brightest to come up with a solution. It only makes me believe that as the world evolves, this is not probably going to be the last time of such instances, and it just warrants more and more investments into this field, and maybe even putting money into genomics, whereby you're trying to cure a lot of those deadly diseases that have been around for the longest that we know of.
Yes.
So I think that's going to be another field that I think not only I hope they do well, but I think there's a lot of, you feel a lot of satisfaction from if they do well. So I think that's another field that I would love to be part of. Now, funny enough, you mentioned the cannabis sector, and I have probably one of the worst experiences with that. And it was back in 2017 or so. I was again very new to investing, as I mentioned.
In October,
exactly. And there was a lot of hype. They were doing so well, and you got to a point where you thought, oh, it's only going to go up, right? Especially if you're new to investing. So it's just, do I want to get on that train and go on, or do I want to wait and maybe wait 2 weeks later and probably buy at a higher price? And that was really my thought process. So I definitely bought a lot of different companies at the time, the famous companies back then, Aurora, Afria, you name it, right? Canopy, exactly. And the thing is, of course, they did go up for a while. And don't get me wrong, I did make some profit, so I sold some, so that was wise. But the problem is, then they came going down so heavily. And maybe how you probably should know also when to cut your losses, or have the gut to stick with them for the longest. And whether I like it or not, I did not. Like, I think most recently 2020, I think late 2020, I thought, enough is enough. I hate seeing my portfolio heavily in red, and it's like, it's also the lost opportunity. So I thought, I'm just going to sell. I take a loss on them and rather park that money into something that I hope that is going to do well. Now, I invested in Tesla. Maybe I got lucky. I think I did. And I know Tesla is probably way overpriced, but I did at least got something out of it, of the loss that I made. So in a way, it's a little bit of more reassurance. But the thing with the stock market, really, Nick, I think it's also, sometimes, I know we say you can't time the market, but sometimes if you also have done your research and probably know that maybe this is not exact best time, but maybe it's about the right time to get in, because this sector has been hit so bad, but there is potential for them in the next couple of years. Then it might be really a wise decision. Whereas, had I done my research, I probably shouldn't have got into cannabis at that time. It was already very pricey.
Yeah. At that point, it was kind of just hype. It
Yeah.
was everybody was excited. I know I traded Canopy. I believe I sold it on October 17th when it was legalized, or 18th, whatever day it was that we legalized
That
it. And
was
I
smart.
knew that I was just buying it for the run up, and I knew it was just like I was so I work in sales in my regular job, and when I'm going in, I'm talking with people and they're talking about, weed stocks. I knew that it was only,
Right.
a few people that would be left. But listen, I have learning lessons too, my friend. I bought a Vermilion, an oil play. This is why I'm such an advocate for the EVs, because I've learned my lesson in the oil and gas space. I thought Vermilion was the pinnacle. It paid like an 18% dividend yield, which I know now why it was so high. And they had exposure in natural gas in Amsterdam and Sweden, and in Europe, in Australia, they had coverage. And then obviously with a few different locations in Canada, I thought this was a no-brainer. The net asset value was greater than what the share was trading at. And sometimes you just can't buy companies that are in or industries that are in a cyclical downtrend. And yeah, that's probably, and that one still sits in my portfolio today. And I've learned something today, that I should take that money, whatever's left of it, and try and put it into something, and not to recoup my loss, but put it into something where there's going to be growth in the industry. So yeah, I appreciate that. You
Yeah.
gave me a little bit of motivation,
Yeah.
little motivation. I think one of the biggest lessons is, um, the money that you put into investing, you should almost treat it as like you don't need it tomorrow. You've already paid off all the debt that you could possibly pay, excuse me, and then you have an emergency fund, 3 months, 6 months,
Mhm.
whatever you feel comfortable with. And then anything after that should be invested. So it's almost like you don't need access to it in a year, 3 years, 5 years. And it's always good to have like a goal. What are you investing for?
Mhm.
Like, and then if you understand what you're investing for, then obviously if you pull that back and look at the bigger picture, okay, retirement, I'm going to retire in 30 years, for example. Okay, yes, I can go a little bit more on the growth side of things. Or, if I'm retiring in 10 years, am I going to want to be in growth stocks right now? Probably not, right? So it's always good to have a goal, and it's always good to have that mindset that there is a possibility in the short run that number can go to zero. Now, if you're in good companies, obviously we've seen it since March. March has been a perfect example of how the market reacts after a downturn, right? So yeah, that mindset of it going to zero is perfect, because it helps that emotion when it does actually drop significantly.
And what you're gonna do at the time, like I think to your point, March perhaps would have been then probably one of the most unique, amazing opportunities in the lifetime of an investor. Like I think if I know, hopefully there's not gonna be a pandemic, but for maybe totally a different reason. I wish we had more of those March moments in the
I
lifespan of our
know.
investing journey.
I know. I missed the bottom by probably 10 days, I think. And not on purpose. It was another lesson that I've learned. If the market's dropped 25 points,
Get in.
I'm putting money to work. That's my new, if it goes down another 10, I'm
Add
okay
more.
with that. I'm psychologically okay with that. But once it hits at 25 negative, I'm in. I'm putting every single piece of money that I have in. So
Because you can't
that's
time it
something.
though, can you? Right? There's no way for you
No,
to
yeah,
know is it gonna go further down. But to your point, that 25% is a huge drop. So, but you would probably think that a lot of the companies out there, quality companies, and especially the companies that maybe you've already added to your watch list. That's why I think it's so important for many investors to have already formed that watch list of the companies that they've done their research. They know that these are good companies that they want to be in, but maybe right now, A, they're too pricey. B, maybe they don't have enough funds. Maybe they need to first build their emergency fund. But once that amazing opportunity comes, those are the times that you really want to take advantage of that.
Now, it seems to me that you're not really like a sector balanced portfolio. It's not like you have, 20% financial. You just try and find good companies. So when you're building your watch list, how many like do you have like a set number of companies, or could it be endless essentially because you just want to find that the right entry point on a company?
Yeah, I wouldn't say it's endless in a sense that, maybe there are many companies that uh, I research on, do research on, or maybe I want to know more about because there's so many people like, talking about it. I think as an investor, I would love to know more. So at
Yes.
least when I'm talking to my fellow investors, then I have something that we can talk about. So I have some understanding of them, but doesn't mean that necessarily would I necessarily buy into those? No. One thing I think, and I'm starting to build that kind of notion and approach more so, is maybe not, you don't need necessarily 5 different companies in the same sector. Like for example, pharmaceutical is one of those sectors that I'm investing in, and I must say I do have a couple of companies in them. So I'm invested with AbbVie, I'm invested with Bristol Myers. Gilead is another one, not so much more, but AbbVie and Bristol Myers are definitely 2 of my biggest holding, as well as Pfizer. So that's already 4 companies there. So I guess all of that to say is that I wouldn't necessarily now go and add a lot of other companies into my watch list, because I probably landed on those companies, and maybe if anything, I would probably should trim it and maybe pick 1 or 2 and invest in those. But if there's a new sector that I'm not as exposed to and I really want to get into, like clean energy is one that I'm super excited about, but I don't think I have yet got enough exposure to. So definitely I want to do more research on. I'm adding a lot more companies I hear about to my watch list and doing research on. One way of, just so that I don't forget about them either, right? Because you have a watch list where you kind of keep track of them and then know that you have to do research on. I just don't want to go and buy it just because I heard about it. I don't feel that that's the right decision for me.
You have to do your due diligence for sure. One to check out and do some more due diligence is I think it's the ticker is GDNP. I'm not sure if you've heard of it, but it's compostable, like one time. So to remove the one-time plastics out of the market, this company has used renewable product or compost products that compost. And I think it's good natured. So it's GDNP. And I think Canada has eliminated plastics, one-time use plastics. I think Mexico is in the process, or they've already done it. The next is the US. I believe they're in Vancouver. They've seen some run up lately. So I don't know if this is obviously off the small cap hype. But it definitely looks interesting on the long run. I think that not so much clean energy, but just clean earth, right? Yeah, so I like that clean earth. I like that. Obviously, we've seen, psychedelics run up a little bit in the past couple months. I'm not in any of that, like a Mind Med, or I know that there's an ETF that's coming out.
Companies. Are you more heavily invested in Canadian companies?
So like a large percentage of my portfolio is a S&P 500 low cost index, and I bought the iShares product, but it trades on the Toronto Stock Exchange. So they offer one that's hedged and not hedged, and I just play that based on where the currency is. Obviously, with the currency being where it's at, the Canadian dollar is so high, I expect the US dollar over time to appreciate. So I'll take off the Canadian hedge. And that's the way that I try and do it. And obviously I've learned along the way, but I think just for seamless, just buy and hold one of them, pick one and go. But yeah, no, I've always been hesitant to go into the US market because of the currency fluctuations. But where the Canadian dollar at, there's no better time to buy the US dollar. So I've started moving in to the US markets. You know what I mean? I see companies like Facebook that I've been watching forever at 250. Last week it's at like 270. Now obviously there's a lot of cloud over there. Amazon was trending around 3,100 since Q3 earnings last year. Yeah, I'm starting to move into the US. How about yourself? Do you invest mostly in the US? Because I know you've mentioned quite a few.
Yeah, I do have. I would say Yeah, a wide range. Like I would say, probably a good balance of my investments are in the U.S. companies, and I do use a couple of different brokerage firms, right? So with Wealthsimple Trade, which I do use, I know you have to pay the conversion fee, and it's a different style, right? I don't know if you've used Wealthsimple Trade to buy any U.S. stocks, but one of the pieces with them is that you can only hold your money in Canadian dollars. So every time, let's say you sell a U.S.
Yes.
Stocks, it's going to be automatically converted back also to Canadian dollars, which you lose kind of you lose because of that conversion fee that they
Uh-huh.
charge. So for that type of stock, although I have used Wealthsimple Trade, I do definitely prefer Quest Trade, which I do use. Um,
Yes.
they I think they charge $495 USD, depending. It doesn't matter to start with, for sure. Even if you buy one shares of a US company, you're going to pay that fee. But
Yep.
for ETFs, they don't charge any fee, and you can also hold your money in US dollars. Now, which brokerage firms do you use, Nick?
So I use two. I use BMO Investor Line, and that's obviously because that's my primary institution. That's the bank that I use on a day-to-day basis. My preferred is Questrade. I think the platform with IQ Edge, and I'm starting to
Mhm.
dabble into technicals a little bit just to figure out the right buying points. I know you can't time it, but if I see something, I look at the 13-day, the 63-day, and the 200-day moving average. Um, but back to that, if you look on YouTube, you can find something called Norbert's Gambit, and that's with Questrade, and then it's an easier way to convert from Canadian to US in terms of saving money, and it's using the fund DLR, which is a US dollar, and then you have to call in and sell DLR in US, and that's how you get it. Norbert's Gambit, there's a bunch
Heard
of
about it,
information
Nick.
on how to do
Would
it.
you like let's say even in Quest Trade, if you were to just have them converted versus you use Norbert's Gambit, would that actually be a huge difference?
If so, what I would do is I would break down and look at the cost.
Hmm.
I know BMO Investor Line last week, I think was 1.29, 1.29 or 1.28 was the exchange rate. So by the time I factor it out and I look at DLR, and if I do the math and it works out to be better, and I have 2 or 3 days to convert because there is a time factor in Norbert's Gambit.
Yeah.
But if I want something right away and I want to jump on an opportunity, I'm at the mercy of the broker, right?
Hmm.
But yeah, Questrade, 495 to sell an ETF is the only commission you pay.
Yeah.
And when you have such a nominal fee, if you're only starting with $2,000, the commission fee adds up at the end of the day. People
It
don't
does.
understand its percentage points, right? Um, Especially if you're making like $500 moves into a company, right?
Hmm.
So,
Now,
um,
one other broker that I kind of dabbled with a little bit was Interactive Brokers Canada, and the reason I
yep.
liked them, it was because of the fractional share. And I don't, I personally, I'm not aware of any other brokerage firms here in Canada that allows you to buy fractional share. They definitely do, so that was quite cool. The downside to that, and I don't think I knew it when I necessarily got into it, because I thought I have understood probably their pricing, but apparently I hadn't understood it as properly. And I have a US dollar account with them. Apparently, once you hit the $2,000 mark, you're still being charged $10 minimum per month as fees, except for if you're more of an active trader. So if you pay them
Okay.
that $10 USD in terms of your exchanges, then they don't charge you anything more, right? They want to recoup kind of that $10. But perhaps that's another option if someone is more interested in fractional buying stocks. Because let's say in shares of Amazon, this way you could really get into it and gradually,
Yes.
and it makes it a lot easier as opposed to
And
like, oh, do I have like 3,000 US dollars set aside to buy it, and God knows what's going to
and for
happen.
some people, like 30-40% of their portfolio at the end of the day, right?
Yeah.
Am I going to buy one share? Yeah, no, that's an interesting point. Do you dabble with options at all? Like I know interactive brokers and options, they kind of go like for the higher experience, you know what I mean? So
I
do you
haven't.
dabble at
No,
all?
I haven't.
No.
Have you, Nick?
No, you know what? I had a friend of mine that in March bought leaps, so like far like 2022 call options on the airlines and made an absolute killing. So no, I haven't. I would look at leaps though. I think, being able to not put so much capital to work. But I think me personally, if I'm going to use an option strategy to start, I think it's just covered calls for the premium as a dividend, primarily a dividend investor. That's kind of the way that I would do that. If I start adding these US names to my portfolio, because there's not real much options on the Canadian market, right? It's kind of boring out there. I look all the time. I try and use few different formulas. I don't know if you're familiar. It's called the Black Scholes. I can send you something after. We can throw it down, link in the description, but it looks at the strike price, the option price, the volatility, and it tells you what that option should be priced at. And you can find discounts for the option pricing. For somebody on like Wall Street bets looking to, make something with super volatility, they can make an absolute killing, but they could also lose all of it, right? Essentially. What a lot of these money managers do, especially like Bay Street and New York and stuff, they limit the upside, but then they limit the downside as well. So they set like a range. So like I said, I'm still trying to learn like the call and put options, but they'll go in and they'll try and let's say Apple's trading at 100, they'll go in and sell it at 90 so they can buy it back at 90 potentially. There's so many different techniques that are out there, but what these guys are really trying to do is saying, okay, if I buy this, I can get up to 9% growth, but I can also sell something in there so I can limit my downside to only minus 3%. And that's what these, big money managers are doing. And that's the best way to do it. To go there and think you're going to make 300 or 400%, it's gambling. You might as well take that money and go to the casino, right?
What is perhaps your most favorite finance or investing book or resource out there? And perhaps tell us why.
Yeah, you know what? I think what really opened my eyes to it, and I know before I get into it, I know valuations are no longer becoming apparent, obviously being at the point of the market that we're at, but I know it's so cliche as well, but The Intelligent Investor by Benjamin Graham was my first understanding of how to read fundamentals, how to dig in. From that book, I started building models where I could, take the financial statements, look at net asset value, look at revenue growth, look at net asset value growth in itself, dividend growth. The fundamentals will always be important. We will get back to that eventually. We've seen euphoria in the market before. We've seen it in 1929. We've seen it in 2000. Obviously, the correction in 0809 was a little bit different, but it will come back down to fundamentals, unfortunately. Buy good companies and hold them forever. You can't go wrong learning from a guy that Warren Buffett, who is my hero, learned from. He studied under him at Columbia University. And do you have a book? Do you have a resource that you kind of treasure as being your the end all be all when it comes to how you got your interest in investing?
Yeah, I mean, the one that really piqued my interest, I would say, it was the Rich Dad Poor Dad, and okay. I've taken a lot of notes from it, and I know it's not. He's probably like Robert Kiyosaki is not necessarily. I mean, he does invest in the stock market, but maybe for him, he's probably the biggest area of investment is more real estate, and so that's one of the things that I kind of learned from that book is around opening your horizons. And even if, let's say, in his case, his educated dad, he had this approach of, you got to go to school and get a good job, to get a safe job. And that's the type of job that, you're set for your life. Whereas, he kind of took the different path and had that more rich dad. that kind of taught him a lot of those skills. And in his book, he talks about what are some of those key skills for anybody to learn and master, skills such as basic financial reading, accounting, and being able to make sense of the company's reports, especially if you're in the stock market. Skills, another skills around being able to sales. One last piece he also mentioned in that was around surrounding yourself with people who are smarter than you and people who you can learn from it, at least in certain fields that you want to explore, but maybe you don't have the skills, because there's no way we can be an expert in everything. I don't think there's a possible way. We are humans. We are bound to our limitations. You could educate yourself in certain fields, but maybe there are other fields that you want to explore. So you want to surround yourself with such people who are good at. And truly, I think one of the other drivers for this show, like the Moementum Mondays, was really that as well. Like, chatting with individuals such as yourself, Nick, who are like-minded, who are, very inspiring and, have done this, learned lessons along the way. And I really find conversations like this very inspiring. I definitely learned a lot of, unique things from this conversation alone. So thank you, Nick, for being part of this conversation and sharing your wisdom and insight with me and the rest of our viewers.
Yeah, thank you so much. And I can't wait to see this when this is finally cut. I'm looking forward to that. Thank you again for bringing me on your show. I'm looking forward to the series as well. Moementum Mondays. I like it.
There you go. Yeah. So yeah, that's really the intention. And I thank you so much, Nick, for being on this show. For you guys, if you haven't done that already, please be sure to check out Nick's channel. They can, I think, find your channel, Nick. I will add a link to the description of the video, but I think you can also, they can also find your channel through Ways to Wealth. That's what your channel is called.
Ways to Wealth. Right? Yes.
Awesome.
Yes.
There's a lot of amazing content. As you listen to Nick right now, he's very knowledgeable and he's very genuine. That's one of the things that I really appreciated about him and wanted to really have that candid conversation with Nick. Thank you, Nick, again for coming to our show.
Thank you.
And we look forward to chatting with you and following your journey here on YouTube as well.
Yes, I can't wait. Thank you, Mo. I appreciate it again. I really do. It's been awesome being on here. You asked some great questions. We had some great conversations. It's good to know a little bit about what you're thinking, what your investment mindset is. So it's been awesome.
Well, thank you so much, guys, for watching this episode of Moementum Mondays. I hope it was valuable to you and you learned something from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. We've added the contact link to our invited guest to the description of the video, so be sure to check them out. And lastly, if you haven't done that already, please subscribe to Moementum channel. Here on Moementum, we post weekly various videos about the stock market investing, stock analysis, financial planning, and finances. Thank you, and I hope to see you next time.